Ravi Dharamshi also joining us now. Ravi, good morning. What a marvelous day. 50,000 on the screen. And the kind of pace with which we've reached here, that's really what everyone's focusing on, wondering how much faster we're going to move after this particular milestone.
Yeah, congratulations to you and congratulations to all the viewers who have exposure and are invested in the markets. And it is definitely a wonderful milestone. I used to think that this is more symbolism. How does any kind of a level really matter? But I think at times like these, you guys need to make a lot of noise so that people become aware of equities. It is quite sad that despite the kind of wealth creation that has happened in equities, not many people have benefited from it. There needs to be far more participation from the people at large in India and benefit from, I think, what is one of the really last passion of capitalism, where you can make your money work for you and actually gain your financial freedom.
Absolutely. Ravi, in the next leg now, what do you feel are going to be some of the key trends in terms of the makeup of the Sensex or the Nifty, the kind of contributors we've had? It's been a complete sea change in the last year, what we've seen during this pandemic. What do you feel will be the defining trends going forward?
No, I think the leaders of every bull market are different. They keep changing. There are certain constant companies which keep kind of reinventing themselves. But apart from that, very, very few companies last beyond a couple of decades in the top decile. So you have to figure out which are the companies that have a business model that can reinvent itself, has a culture that can survive the ups and downs, has a balance sheet that can survive a downturn, and they are gaining market share, are constantly expanding their addressable opportunity. So there are very, very few companies that do that. But even some companies that do not manage to do that, they can also be very good wealth creators in a transitionary period. So having said that, I think clearly the new wealth creator are the digital companies going forward. That is where the world is heading towards. The world is being eaten up by software, and that software is being written in India. And now there are new business model innovations along the digital lines. There are platform companies, and they are in a category where they have kind of a winner takes all kind of economics. So there will be few large winners even out of India over the next 3, 4, 5 years. I think a lot of these companies, the new age business models which are in the private domain, will get listed on India, and they will look expensive. And but I don't think they'll get too much cheaper from where they list.
For a retail investor, Ravi, I mean, what's the difference now in this bull market? I mean, there have been periods earlier where perhaps a retail investor was, afraid of getting their fingers burnt. But today, the market seemed to be the forefront choice when it comes to an asset class, when it comes to investing. And, we do seem to have matured quite a bit. So what does a retail investor really have now to look forward to going ahead?
The first thing that any retail investor needs to do is make sure they have an exposure to equities market, whether it is through DIY, whether it is through mutual funds, whether it is through PMS. If you do not have the capability to understand the markets or react in an opposite manner to the emotions that market throws up, then you give it to a professional who can do it for you. But having said that, I think there's been a wonderful innovation from the mutual fund industry of SIP. And if you can see, the SIP flows have been very, very steady. That takes care of the, emotions that market can bring out in you. So SIP is definitely one way for retail investor to go by, where constant flow of money can keep pouring into the market. And it is not a 3-year, 5-year product. One needs to understand it's a 20-year product, and magic can happen over 20 years when you keep putting small amount of money. I think in a 20 years time, we can have a great, huge banyan tree, which will keep giving fruits for a long period of time.
Okay. we've been asking everyone, Ravi, in terms of their highlights or memories, significant moments they remember, in the last few years or many years that you've been investing in the markets. Anything you'd like to share with us as we hit this historic milestone?
No, so it's been a topsy-turvy and wonderful journey. I mean, I cannot put it in words, but the excitement, the palpitation, the downs. I mean, there was a time when everybody was down in dumps, and I cannot highlight. I mean, but one particular instance clearly comes to my mind is in 2004 when NDA won, government lost, and the market was down, limit down 20%, and that was my first experience of what can happen in the market. And of course, then it kept on getting repeated a couple of times on the upside as well as on the downside. But can't forget those times when, I mean, even, it's like what Mike Tyson says, everybody has a plan until you get punched in the face, and market keeps punching you every time and again. And you have to figure out how you're going to handle those punches. But if you can handle those punches and come back, then market is going to be very, very rewarding for you.
Ravi, did you see this level of 50,000 coming in? Like you were just pointing out your memories of the Bombay Stock Exchange and of 2008, or for that matter, the many downs and lows that the market as well has seen. Did you actually anticipate that we could see 50,000, especially in a pandemic year, come back so quickly from the March lows?
No, absolutely. I knew it was going to happen on 21st Jan. I'm kidding. No, there is no way. I mean, I would have thought that we are going to hit 50,000 at the beginning of this year. Yes, there was a strong belief that we are going to do way better than what most people are expecting. But the kind of surprise and the kind of up move has surprised even the most optimistic one. And it is, the good part is it is not only purely speculative. It is backed by some earnings upgrade and some economic revival. So that gives a lot of confidence that there is a floor at some level. We are not going back to the levels that we saw in March. Whether that floor is 10% lower or 15% lower, but that is what gives the confidence that, invest at this point of time. If it does correct, invest more. That's the only way to, overcome this fear, or whether it is fear of losing out, or whether it is fear of, correction that's coming up ahead. You have to spread it out.
Yeah, indeed. Ravi, there are still a lot of naysayers in the market. Part of the market also believes that that's the reason that we will see much higher levels. Many are in disbelief from the kind of recovery that the market has seen from the March lows. Just one message out there to the retail investors, those who haven't quite cherished or enjoyed or even participated in the rally that has played out from the March lows. What would you tell them?
I think the first thing to do is just get some exposure. Do not worry about the correction. Do not worry about timing the market. I think if you and have a longer term horizon, if you can think in decades rather than in months or weeks, then you will be way better off. You will be, as we can see, I mean, the first in 1979, Sensex was 100 and it went to 1000 in a matter of 11 years. That is 10x move in 11 years. The next 10x move came in 16 years. And the next 5x move has only come in about 15 years. So since 2006, and we are in 21 already, we have only moved up 5x. So I would believe that the next 5 years are going to be way better than the last 5 years in terms of market returns, in terms of economic performance as well. So do not worry about the correction that is coming. There will be a correction. There is no way you can avoid it. Only people, those who can avoid it, are fools and liars. Those who want to avoid it, it's okay to live through the up. If you want the market to reward you with the best, then you have to face it at its worst.